name is Jack McKenda, Chief Operating Officer with Park City Credit Union. Last time we met, we talked about credit scores, gave you some general information, and we talked about the importance of credit scores. Today we're going to get a little deeper into it, and we're going to talk about a number of items. The first thing is, how do you establish credit, or how do you establish a credit score? Most people, this occurs when they're young. They're starting to think about opening a checking account or getting their first car loan or even applying for a credit card. And at that point you don't have a credit file, so you don't have a credit score per se. So you need to start establishing a record with somebody that will report that information to the credit bureau to establish a score. The way that most people do that is they will either apply for a loan and use a cosigner, somebody that'll back the loan, because again, the financial institutions don't really know a lot about them, so we're getting to know you. And by doing that with a cosigner, the cosigner is actually assuring that they're going to help make sure that the applicant actually pays for the loan and pays for it on time. After you do that for a period of time, usually it's at least 6 months of monthly payments, you'll start to establish a credit file. Sometimes it'll take a little bit more than just one loan for a short period of time to get a score, but as you continue to establish credit in that respect, eventually you will get a credit score. A second way of doing that, if a cosigner is not a possibility, are through services such as what Park City Credit Union offers, is a credit builder loan. You can come in and talk to one of our lenders about that program, but quite simply it's a loan to put money into a savings, and that savings does secure the loan, so it does help establish a credit reference and a credit score. Once you have a credit score, and we talked in the last video about all the methods in which you can monitor that score. If you want to improve the score or correct some deficiencies, there's a number of ways that you can do that. Obviously the most important factor for a credit score is to maintain good payment history. In other words, make all of your loan payments on time. Don't take advantage of the 10-day grace periods that are offered, because sometimes then that slips. If you become at least 30 days past due on your on a loan payment, then it's going to be reported to the credit bureau as such, and that is something that will drastically reduce your credit score, probably the main factor. So always make sure that you pay your bills on time, and that way it's reported to the credit reporting service that you're doing that, and it keeps you with a good credit score. The second thing is the amount of loan or credit amount that you have on revolving accounts, such as charge cards. The credit bureau does assign a certain factor relating to that, where let's say you have a $10,000 credit line on your Visa card. Depending on how much you actually owe against that card, rule of thumb is around 40%. So your credit score is typically good if you had $4,000 against that card, but when you start getting closer to the limit, $8,000, $10,000, and you max out that card, that actually has an effect on your credit score as well. And not necessarily just for that one credit card, but they take a look at all the revolving credit you have and how much money that you borrowed against them or that you owe against them. A good rule of thumb is to try to keep that at 40% or less. A number of other factors that affect your credit score are if you have some medical bills maybe that you didn't pay, a hospital will turn you into a collection, or if you end up in a small claims court action and you get a judgment against you, those things are also reported to the credit reporting agency, and those will drastically reduce your credit score. What do you do when those things happen? Well, we tried to tell you how to establish a good credit score at the beginning, the factors that you should watch for to maintain a score. But the biggest thing is, as you monitor your score and you see that it's not as high as you would like it to be, and again, you want to talk to somebody at Park City, we'll help you, and we can give you tips and tricks on how to improve the score. Sometimes as simple as paying off that medical collection, or catching up on those bills. Maybe you need a bill consolidation loan that will help you consolidate a lot of that credit into an installment loan. Things like that can help improve your score. It doesn't happen overnight, but it takes a short period of time, 6 months. The important thing to remember is the sooner you get it taken care of, the better for you. The better you're going to start saving money on interest rates on loans that are charging you a higher rate because you're getting a better credit score in the long run. If you liked this video or found it helpful, please subscribe to our YouTube channel for more Financial Friday videos.